Okay, welcome everyone to our March meetup. We are back running and got a fantastic session for us today. Some really interesting talkers, in my opinion, some really interesting topics. So we are going to start off with the tax service, and we have a wonderful speaker. Nathan is going to come and talk to us all about the tax service. And then Saurabh is going to talk to us all about the landed cost module, particularly the financial sides. And then we'll do over what's happening next month, and we'll have a little bit of a call for help in that sort of situation. So lots to go on with, and just, yeah, wonderful to get started. So our very first slide that we're going. Oops, here we go. Here we are. Righty. Oh, I don't. Tax service. So Nathan, thank you very much for joining us. I believe you should have presenter rights now. To get us started.
Okay. Good evening, everybody. So let me share my screen.
This is a very exciting topic. I don't know if anyone else is excited about this one, but I definitely am.
Tax. What's not to like about tax? Hey,
solve our problems, Nathan. Solve our problems. I mean, I'm really looking forward to. So I saw a lot of hype from Microsoft around what they've got on this new tax engine, and all the problems that we've previously or historically had from many clients saying, "Can you do this?" Now there's a lot of determinants. So I'm really keen to hear and know what we can take and leverage from this. So this exciting, in my view. Yeah. Hopefully everyone is excited as I am.
I'm just excited that they finally started to do something with tax, to be honest with you, because the tax engine itself has mostly stayed the same since, 2009, 2012 days at least.
Yeah.
And the world has changed dramatically since then. Anyway, Nathan, we're so sorry. Please, no. I'm sitting here enthralled, can't waiting for you to start.
Thank you. Thank you for having me. I've prepared a few slides just to introduce the topic, and then I think what you're looking for is the demonstration. So hopefully I won't speak for too long, and then I'll dive in straight into the system. But just a bit of introduction. My name is Nathan Daubagna, and I'm currently a lead finance consultant for Avanade UK and Ireland. And I've been working with Dynamics products for about 10 years now, since Dynamics 2012. So I've worked with end user clients, but also with a few partners. And before I start, I just want to thank the user group team for inviting me and for organizing those sessions. I think this is great. It's a great way to meet people and to network. So thank you guys for what you're doing. And I also would like to thank my colleagues in Belgium, the Avanade Belgium team, because I'll be using the Avanade Belgium sandbox today to do the demonstration. We had prepared it, so they have kindly allowed me to use the environment for today. So thank you guys. What I'll do now, so I'll just kick off because I know we already shot and I'm sure you want to get into the nitty-gritty of things. But before we talk about the tax calculation service, I think for those of you who are not necessarily Dynamics finance consultants, I just wanted to go through what the standard VAT determination process is within Dynamics. And the reason why I wanted to do that is because fundamentally, that stays the same.
C'era lì il coso, quella azzurra.
Sorry,
no, allora non l'ho presa. Che cacchio ne so, amore, io...
Sorry.
Sorry, I think someone...
Is it just if you're not on mute. Yeah, we have some wonderful exotic talking happening.
Thank you. So yes, I just wanted to just talk through briefly, because fundamentally the VAT module and the tax module hasn't fundamentally changed, okay? And the core principle still stands, whereby the VAT calculation is still driven by the VAT code, and the way that the system arrived to the VAT code is through a combination of a VAT group, which is associated with a customer or a supplier, and an item VAT group, which would be associated with an item or a procurement or sales category. And within a transaction, it is the combination of the two that derive which VAT code is going to be used. And from this VAT code, we then derive what the VAT settlement period is going to be, what the VAT authority is going to be, what the GL ledger accounts are going to be, whether it's an input or output VAT, and also for some countries, what the reporting codes are. So it's a little bit alien in the UK. We don't really use those reporting codes, but in some countries, this is critical. So fundamentally, this doesn't change, okay, and that principle still stands. And in fact, we still need to have item VAT groups, and VAT codes defined. And this is just an example whereby if a product in the system was associated with a full tax rate, this would be the optional VAT code allowed. If your customer is associated to this VAT group, these would be the VAT codes allowed. And the common code between the two is this VAT 20%, and that drives what the settlement period is, the posting profile, the currency of the VAT, and on the back of the settlement period, it links up to the tax authority. So I just wanted to give a quick reminder of that key principle, because that still holds true with the new tax calculation features. And now, before we go into more detail, I just wanted to give you a bit of what kind of company profile I found, because I've implemented this now twice, and the type of companies that would you be using the tax calculation service. So for example, in the UK, we would have a UK legal entity that would be VAT registered in the UK and the Netherlands. But they manufacture products in the UK, but they sell anywhere in the world. But now, especially because of Brexit, any EU sale goes through the VAT registration as if it would be a Dutch sale, basically. And as a result of this, even though they don't need to do a HMRC VAT or Intrastat declaration, or EU's declaration, so should I say, or Intrastat, they still need to report to the Dutch authorities. So if they are selling to France, they will need to report that they have sold from the Netherlands to France. And this is a key here, and it's about the currency element of it, because the legal entity may be a UK legal entity with a sterling accounting currency, but all those declarations to the Dutch authorities obviously must be done in euro. And although technically you can get that information out of Dynamics, the problem that the tax calculation engine solves is that with all the new features, the EU and the Intrastat reporting are now transferring in euro, when before, if you were to try it without the new features, even though you may do a sales invoice for €1,000, in the Intrastat and in the EU sales list transfers, they would be converted into sterling equivalent, which is obviously no use if you need to return and do your declarations in euro. And also, with the addition to tax calculation, Microsoft are doing a lot of work to be able to do digital submissions to some of the countries. So the likes of Making Tax Digital for the UK, right now it can only be done, or I think previously it could only be done if you were a UK legal entity. But now with the new tax calculation, if you are a Dutch legal entity, that has got a UK VAT registration, you can now use the likes of Making Tax Digital or any other country digital submission. So that's kind of one example where tax calculation becomes useful. Another one could be where it is a UK business that has got warehouses with inventory held in different countries in Europe, and they may sell directly from those warehouses directly to end customers in Europe, or they may also sell or transfer between warehouses between different countries in Europe. And this is where it also becomes relevant, because the business would have VAT registrations in all the countries that they have got warehouses, and they would need to do account for VAT on transfers between one country to another. And then we have the same issues that are being solved, that we can not only track it, but that we can also report in the correct currencies. So that's the type of businesses that this feature really becomes useful for. Right, so in terms of availability, I have put in a few slides, but pretty much every European country, Middle Eastern country, Asian or North American country is covered. But there are obviously some countries where it is not yet available. As you can see, Microsoft are adding more countries. Okay, so I would expect that eventually that list would grow. And if you are to implement this functionality, there are some prerequisites. There is a LCS add-in that needs to be installed for the project, and that would tend to be done by the technical team. Then there is a lot of configuration on RCS that needs to be done, and that would be more of a functional work. And then there's a little bit and not a lot of configuration in finance. So there's some features to be enabled, and then there's a handful of parameters to be enabled as well. But what it is, the tax calculation service, it kind of piggybacks on the standard triangulation of the tax setup. But the advantage is that it allows for overrides, and it allows for rules to be set up. And those rules are really scalable. We can use as many criteria to define what the VAT group or what an item VAT group would be based on different scenarios. And I mean, I think I've kind of mentioned it now many times, that it does allow to do VAT returns in the country format for multiple VAT registration in one country, the same for EU type reporting. But what is also added value is if a company has got a customer that themselves have got more than one VAT registration. So depending on where you sell to that customer, you need to invoice them to a different VAT registration. The system also caters for that, where we can have customer and suppliers with multiple VAT registration. And the rules that are being set up don't need to be set up for each individual legal entity. It is all done in RCS, and it can be pushed to more than one legal entities. So if legal entities share the same common rules, the functionality is the rules and the overrides are just pushed directly to those multiple entities. In terms of what processes are covered, and this is the list, but it doesn't mean that once you enable the features, you need to, it has to be for everything. You can enable the features only for sales if you want, or only for purchases, or all. Okay, so you don't have to, so you decide when you enable the functionality that you want to only enable those rules overrides for sales, purchases, or inventory transfers. And so that's what the original product offered: sales, purchases, inventory. And since then, Microsoft have added free text invoices And now they are also adding those rules to kick in for GL journals and supplier invoice journals as well. So that will be in 26, version 26. I just had a few slides about RCS and the setup within RCS. So everything that I've said about the tax code, tax group, item, VAT groups, even if you already have them set up in Dynamics Finance, they need to basically be replicated in RCS. And what do? We just create our VAT codes the same way that we would have them in Dynamics. We set up our VAT groups and specify which VAT codes are allowed for the VAT groups. We create our item VAT groups and specify what the VAT codes are. Okay, so whatever configuration that you have in F&O, that configuration would need to be replicated in RCS, in the RCS feature. And then the advantage then is those rules that can be set up. So for example, this tax group applicability is the one that I think is will be mostly used. It would be to override the VAT group on transactions. And for example here, and that's what I would use for the demonstration, I have set up that depending on where we are shipping, the VAT group would change. Okay, so irrespective of the customer and what is defaulted on the customer, the transaction will be overwritten to pick up the VAT group from that rule. Okay, and the same can be done for item VAT groups, although I think that's less commonly that would be less commonly used. And finally, for your customers and your suppliers, you can also say, well, if this customer and we are shipping to the UK, this is the customer VAT group that we want to use. If we are shipping to the same customer but to France, this is the customer VAT group that we want to use. Okay, so all those rules are set up in RCS. And in terms of the criteria to determine what the rules would be, they can be based on the transaction headers, and this is the standard list of criteria to use, or they can be based on the lines. Okay, so your sales order category, your sales order line item, etc. Okay, so that's all the criteria, and I think you can have up to 20 into the rules. Okay, so you can use 20 criteria to build the matrix. That's what is currently available. Those criteria are the standard criteria, but it can be extended. It does require, so it's very well documented. Okay, I mean, everything that I'm showing today, it's taken from the Microsoft doc and it's very well documented. But if you wanted to extend the list of criteria to use, and a common one would be based on financial dimensions, that can be done. It does require a little bit of customization. Okay, so there is some small development needed, but there's also a lot of configuration needed, especially on the Power Platform Dataverse entities. So it can be done, but it's not as simple. It's not as simple as it looks. The only good thing is Microsoft are quite supportive and in helping when you need to do that. So that's the rules and the criteria that can be used in rules. And finally, in terms of the setup and what extra needs to be done in F&O, the first thing is about registration IDs. We need to put registration IDs everywhere in the legal entity. For each entity, each address, we need to put what the VAT ID is. On the customers, so traditionally you would put a VAT number on the customer form. We need to add registration IDs with the same VAT number onto the customers and the suppliers. The registration ID needs to be linked to the tax authorities, and the VAT number also needs to be associated with the settlement period. So those registration IDs needs to be added in those 4 places. And what is then available for VAT returns and EU returns is to define what format we then want to use. Okay, so for example, for VAT, we are in the same legal entity, and traditionally, from an electronic reporting point of view, you could only use one format and define only one format. But now with the new features, you can define that if you're doing a VAT return for a German tax authority, you can use the German Excel format. If it's a UK, you would use the UK format, and so on. And it is the same for the Interstat reports. Okay, so that really facilitates reporting for multiple countries. And also, like I said, the big advantage is the currency element. Any VAT report and any EU report transfer onto those inquiry screens are now being transferred in the VAT currency and not the accounting currency of the legal entity. Right, so that's that for the slides. So hopefully that wasn't too. And I will
Fantastic,
then.
Nathan. Absolutely fantastic slides. We've already had people request them.
Okay, very good. I'll be happy to share them after. But what I will do is get into the system. Right. So, like I said, thank you. Can you guys still see my screen?
Yep, looking good.
Yeah. Okay. So, first thing I will show you is in the RCS environment. Okay. So that obviously needs to be commissioned and linked. So your technical architect would be able to do that. But in the tax calculation feature area, this is where you would set up your features and the rules. Okay, so you can see you can have as many versions as you want, but you can also have as many features as you want. Okay, and by that I mean if you wanted to share this to a couple of legal entities, but you wanted different rules to apply to other legal entities, you could just add new features. Okay, you could just create new features and new rules. In terms of the versioning, you can create as many versions as you want. And when you create a new version, it just picks up the previous version's default, and you can then see the setup and just simply amend that code, like I said earlier. So if, for example, the VAT code here was to change to 20%, you would just change the rate here to be 20%. If you needed a new VAT code, you would create it here, and then you would automatically synchronize with FNO. So any new codes that need to be created, you would do it here once you've enabled the features. That would be your, like I said, your item tax group. It's a bit kind of like the same what's in standard FNO. You just create your tax group, your item VAT group, select which VAT codes you're allowing them for. The same for your VAT group. But the big thing is your tax group applicability. And right now, like I said earlier, I've only got one criteria, which is the shipping country. And if I wanted to add more, I would just go manage columns. And here I could add maybe the, let's say, business process would be a good one to have. Yeah, I'll just add business process. And I would say if we do a sales, it would be this VAT code. But if we are receiving, into a UK warehouse, a purchase order, maybe we want to use a different VAT code. Okay, I'm just making something up here. All right, so that is how you could define your rules basically for the VAT group determination. If the way Microsoft have designed this, because you can in theory have a transaction that would fit multiple rules, okay? You know, you could be, so if, for example, I didn't have here the purchase, for example, and if I just had a sales order that was going to the UK, and if there was 2 rules that the system found, it would look at how many criteria of each rules are a match, and in that case, it would pick up the first one. If there are 2 rules that it finds that have got the same number of criteria as well, it picks up the first one. Okay, so just something to bear in mind. But when you have your rules completed, you would just change the status to complete, and then you would publish this. Okay, so the publishing doesn't make it live. What it does is it enables it to be selected in the legal entities. So that's your tax matrix created. Okay, so you've got all the versions. And the next step is in F&O. In the tax module, there is this tax calculation parameters here. So you would need to, on the legal entity by legal entity basis, you would enable the tax calculation service. And once you do that, you then have to select which feature and which version of the feature you want to apply. So if I select version 13, okay, that I've just created, what this is going to do now, it synchronizes F&O with the feature, and you receive a synchronization report. So if you remember, I have made a change to one of the VAT codes. Okay, so what the synchronization report tells me now is that originally this VAT code, the value was 19%, and now it has been changed to 20%. If I had created a new VAT code, it would just tell me which VAT code has been created. If I had moved VAT code between item VAT group and VAT groups, it would also do that. So that synchronization report tells me what has changed, and the VAT code, VAT groups, item VAT groups are automatically updated according to the new feature. Okay, so you can see, I think, which one is it? What is it? DE something. D standard here, which is now 20%. And what you will notice in the VAT code, VAT groups, and item VAT groups is there is a new field that has been added, which is called source. Okay, so if the code has come from or has been updated from the tax calculation, it will tell you here that this is where the information is coming from. If it hasn't been, okay, it would still say that the source is manual, because if you remember, you could enable the features only for sales and not for purchases. So you could have some codes that you still want to create in F&O that are not in RCS, because you don't want to use those for the different processes. Okay, so here, this is where you would specify what processes you want to use the matrix for. And then finally, you just enable multiple VAT registration for VAT EU sales list and Intrastat. Right, so how that works in practice. So if I go to a transaction and I create a new sales order for this customer. Okay, so I'm selling 1 unit at this price. What you will see is, as a default, the system will select what has been set up on the item and on the customer. Okay, so that doesn't change, and it will keep it. So if it doesn't find a rule to match it in RCS, it will keep the standard VAT group and item VAT groups. Okay, but every time the transaction document is updated, so in the example of a sales order, it would be when you do a confirmation or a receipt, or you post an invoice, or if you hit the VAT button, the system will check against the rules, okay, and it will update them accordingly. So if I, for example, hit VAT, so we can see here that the VAT code that is going to be used is the UK standard VAT code, and that is because we are shipping to the UK. If I now change the delivery to France, okay. Sorry, I think I put it under header. So if I change delivery to France, okay. So we can see now that the VAT code that will apply is French standard VAT. If I go back to the rules and the delivery address, so it's based on the header, not the line, and I change the delivery address to be Spain, okay. Okay, now the VAT code that is going to be used is France EU cell. And you can see here the customer VAT registration number also updates, and it tells you here, based on the VAT code, which one of your VAT registration will be used. Okay, so having done that, then we can just generate our invoices. Okay, so I'm just gonna generate the invoice. One thing to also bear in mind is if you create rules based on lines, okay, and you've got conflicting VAT registration, so maybe one line is going to find your UK VAT return or your UK VAT registration, another line is going to find your Dutch or your French VAT return, that's not going to work, okay? So you won't be able to post or save those sales orders. So a transaction can only be used through one VAT registration. And you can see here as well that we have our standard VAT number from the legal entity set up, okay? But what the features add onto the standard invoice documents is the customer VAT number and our real VAT number that we're using. So this is something that probably needs to be hidden once you enable the features. Right, so that's just to show you really how the VAT amount change. And the next thing is when you do, so that's what I showed earlier. When doing a VAT return, so I think I've got it set up here that for Germany, it will use the German Excel format, the German format, and for the UK, it would use the UK format. So if we look here at our German settlement period, we can see that there has been 2 transactions posted here. Okay, standard German VAT and an EU transaction here. And if we now do our VAT return for March, okay, so the system just generates in the German format. Okay, and same thing really for the UK. I think I've got a few transactions posted as well. I've only got one. But you can see here, that was a transaction that was posted in euro for 188 euro of VAT. And if we now do the VAT return for the UK, okay, so we get our report, our VAT 100 submission in the UK format. So that is, for me, the main gain from the tax calculation features. But then when it comes to foreign trade and EU trade, what the system is, Microsoft have added is when transferring data onto those inquiry screens, you decide for which registration you want to do the transfer. Okay, so if I'm transferring for Germany, probably had the transaction earlier that was created, and I can transfer for France as well. So I think that one that I just did should come in here. Yeah, I just did this one. And then when exporting the reports, again, you decide which country or which VAT registration you want to export the reports for. And because of the country of the registration, it picks up the format that you have defined in your foreign trade parameters. The one thing that I think the EU have harmonized the EU trade transaction codes, because I know I think one country for sales could be 1, but another country wanted to see code 11 if it was a sell. I believe the EU have harmonized this now, so it may not be a problem. But in your foreign trade parameters, you can only put in 1 transaction code per transaction type still. So that's the one thing that maybe we need to look in, that somebody we need to look into is if the EU haven't harmonized it just yet, it's transforming the data in electronic reports to cater for the right country format. Okay. But yeah, so you can see here that we get our outputs in the format defined. Right, so I think I've gone in quite quickly over this, but that's all I had. That's all I had prepared. So I'm happy to take any question. I know I'm a bit over time, but if there's any question.
Brilliant, absolutely brilliant presentation. I am just bowled over. You've done absolutely amazing. Thank you so much for all of this. We do have one question besides, can we have copies of your slides? And that's from, I'm going to brutalize your name. I know it's not pronounced Joachim.
Joachim, maybe.
Yeah. I'm so sorry. I know I've seen your name and I've heard it being pronounced before, and I know I'm pronouncing it wrong. Example: a Dutch company also ships goods from Luxembourg with Lux VAT number. Is the tax calculation service also available?
Yes, because the legal entity is Netherlands.
Yeah.
So as long as your
It's on the
legal
list.
entity is in there, which one do I have? So because your legal entity is held in the Netherlands, you would just have a VAT ID of country Luxembourg. So I don't foresee any issue with that. Now, Microsoft probably don't have Luxembourg but Excel return format. Okay, so you'd probably still be using your default SSRS reports for them, but in theory, there's no reason why not. Yeah.
Sue also asks when will this be available. So my understanding and Mizelle's understanding is it's available now. Nathan, is that your understanding as well?
Oh yes, it's been available since November last
November, yeah.
It's available since November, but there's more and more features and more countries
I was looking
being added.
for
But it's
project transactions.
Projects.
Sorry. So you mean for
Sorry.
projects? Okay, got it.
Ooh.
I haven't seen anything about projects.
No, last time I spoke to Microsoft, they said they didn't know when it would be available, and I just wondered if there's been any update.
I have not heard anything.
Okay, thank you.
About projects.
Sorry.
It's always last, isn't it? So it's always
Yeah.
Yeah. No.
Okay, thanks.
They haven't included project transactions on this. I know sales orders, purchase orders, free text.
Transfer orders.
Yeah.
And they're adding vendor invoice journals and GL journals.
Oh, that's good.
We've got GL journals. Is there a way to like hack your processes and sales orders as well? And free text invoices if we, anyway. Oh, we could get into the fun of this, but unfortunately, guys, we have, well, not unfortunately, fortunately, we have another amazing session. So, thank you so much,
everybody.
Nathan. That has been absolutely, that has legitimately been really, really, really cool. And it was just the right level of detail. I got very happy with the level of detail. You're an absolutely amazing consultant. Thank you very much, Nathan.
And just wondering as well, because there was a lot of people who asked about the slides, Nathan. I guess if you are able to share, we can make them available to.
We have to figure out how to do that.
Well, they can reach out to you, Nathan. Do you mind?
Oh yeah, they can reach out to you over LinkedIn. That way you can increase your network.
That's no problem at all. I mean, the slides are literally copies, screenshots from the Microsoft documentation, so I have no problem sharing them. No problem.
Thank you.
What I could do is if you send me a copy, I could email everyone in the meetup group the slides. That's an option. We haven't figured out how to share. We've been going for a year now and we still don't know how to share documents. But my suggestion is to go straight to the source on this one. Nathan seems like a lovely guy. Alternatively, we will figure out a way.
Sharing. No, I agree. Well, then.
Wonderful. So Saurabh, is that pronounced? Am I pronouncing this right?
Saurabh.
Yep. That's
Hello,
right.
welcome. Oh, if we thought that was exciting, I cannot wait for this one. The landed cost module. Talk about shiny new tools. This is a whole day of shiny new things. Welcome, and thank you very much for presenting. Now, I just want to do a quick check to make sure that you can present.
Yes, I can.
Oh, yep. Wonderful. So over to you, my dear.
Yep.
It'd be fantastic.
Sure. Let me just quickly share my screen.
Wonderful, can see it.
Great. Thank you so much, everyone, for joining us today, and thank you, group, to inviting me here
Thank you for
and share
coming.
my thoughts on this landed cost module. So today, I'm gonna share thoughts about the landed cost module. So landed cost module is something which is a combination of, like, it is more of the supply chain feature which we have got not recently. I think it has been a while now, but since finance has its own way of reflecting on each and every feature which comes into the dynamics, right? And everything has a finance impact. So today I'll try my best to explain you that how this landed cost module is going to have the financial impact and the costing impact basically on our different product cost and the inventory accounting which we get due to this landed cost process. Okay, so uh, this is about me. So I'm Microsoft Dynamics Finance Functional Consultant for almost 9+ years of experience. I'll share my this deck with you, Chile. I think you can help me out in sharing with everyone then, like how you will do
Wonderful,
it like
yeah.
that. Yeah.
And if you want to send your blog
Yeah.
link into the chat here so that everyone can access it straight away,
Yeah.
when after this is, it'll be fantastic as well.
Yep, definitely. So this is about me. So I think let me just directly jump into the topic, what we are going to talk about. Okay, so this is about the landed cost. So first thing is I'll just give this some overview about landed cost, and then we'll jump into like how it is going to impact finance side. So landed cost is basically we will say it's a product cost plus any cost which we incur to get the product from the source to the destination. So let's say and it is mostly applicable when you have a import of your product like from the overseas, right? So let's say there is a overseas manufacturing facility. There is a product which you want to get into your warehouse. Now this product will, I mean, transit from the overseas port, then shipping, then it is gonna be on your domestic port, and then it is going to be in transit to your own warehouse, and then finally it will arrive to your warehouse. But when this product is transiting from this location to this location, right? Apart from the cost which it is having, like a manufacturing cost, you can say, right? This cost, it is going to have a certain other cost involved in that, right? So the cost finally which you get, like a product cost plus the additional cost, it might be insurance, customs, some fees, port charges, or so many. I mean, there can be a lot of other costs which are there. So the product cost plus this cost will be, I mean, if we add both of them together, will become your landed cost. So that's what is the landed cost, we call it. Now, if you talk about in Dynamics, right? So if I'm not wrong, this landed cost module was introduced with I think the version 10.0.21. I think right now, if you are using 10.0.24 or 25, I think it is by default enabled by Microsoft when you install that new version. But if you are not seeing this module, you can just go to feature management and you can search for this module and then enable it. Now, how this module is different from our traditional the transport management, which we have as part of our Dynamics. So basically, you can categorize in two parts that for all the outbound operations, uh, the transport management will be used, right? So when you are shipping out your goods, then you can use the transport management. But when we talk about the inbound operations, right, then the landed cost will come into the picture. So to manage all the inbound operations, we have to use the landed cost, and it is going to help us. So it is going to help us in both the ways, from the supply chain perspective as well as from the financial accounting perspective. So I'm going to talk more about the financial impact, not from the supply chain perspective today. So now let's understand the problem statement, that what is the problem statement we have and how it is going to be solved, or how do we manage that problem statement with this particular module. So just assume like there is a product I0001 which you are going to import from this particular supplier, and the product cost from the supplier is $1,000. Now, when this product is being supplied from the supplier location to your own warehouse, we estimate that, okay, there are going to be different additional cost, which is like we are going to pay freight on that, we are going to pay insurance, fuel, local transportation. And the rule for each of them is like, let's say freight, we are going to pay $100 per quantity, and then insurance is going to be your 10% of the product cost, which is like, again, 10% of $1,000 is $100 again. Then let's say fuel is going to be $1 per measurement, and let's say the product measurement is 20 kg, so that means the $20 is going to be my fuel cost. And it can be anything, like if your measurement is different. And then let's say local transportation is 10% of the freight cost, not on the product cost. So that means the freight cost is 100 you derived, and 10% of that is going to be your local transportation. So like this is just an example. You can have several other costs, or you can have one cost or two costs. So you can estimate your cost based on different formulas. So let's say now if we do this estimation, so we get like 100 plus 100 plus 20 plus 10, 230 as a estimated cost. So what is going to be my total landed cost? It is going to be my product cost plus all the additional costs which I'm going to incur, which is 1230. So now getting this accounted is not the problem. Now problem starts with the next thing which we have. Now $230 which we calculated is the estimated cost. Now shipper is going to submit the actual bills. So it maybe the single supplier is going to submit all the freight, insurance, and all the bills, or it can be different supplier. So when they submit, let's say assume that it is a single supplier who is submitting the bill. Now the supplier submits a bill of $300 instead of $230. Now, if you have accounted your cost as 1230, but later on you receive the actual bills as $300, right? There is a difference of $70 in your product cost. Now that cost also has to be accounted and also has to be adjusted. So if you talk about this whole scenario, I mean, this scenario can be divided into different use cases. Now, this is just one of the problem statement. Now, this problem statement can be looked into in perspective of different use cases. So now let's understand what are the possible use cases we have when we order this product, and when this product it transits from the source to the destination, which is our own warehouse. So how it is gonna have different scenarios. So let's say the actual freight bill of $300 which you are receiving, you receive after the product is been received and invoiced, right? So that means there has to be a adjustment of $70, right? That's the objective which we need to have. There is a possibility that the actual freight bill of $300 is being received after even we receive the product, invoice the product, and even we have sold the product. So at that point of time, we even have to make the adjustment to the COGS of our product, because the COGS would have been at the estimated cost, not at the actual cost, right? The third possible scenario which is there is like actual freight bill is received before item is received. So what happens sometimes the item is supplied from the overseas port to your domestic port, and the freight supplier, right, the third party supplier also submits a bill to you, and also the source supplier, the actual supplier, submits the bill to you, but still your goods are lying on the domestic port. It is not still received in your actual warehouse. So basically your goods are still in transit. You have not received that inventory in your warehouse, but you have to record both the bills from the actual supplier, the product supplier, as well as from the freight supplier. So how do we manage the accounting for all these three scenarios? We are going to talk about this. Okay. So now, before we jump into these three use cases, that how this will work and how we will create the transaction and how the system is going to adjust all these things, we need to just look at some setups which we need to have before we create any transaction in the system. So the first setup which we need to do is like when we were talking about the estimation of different costs like freight, insurance, or other local charges and other things, right? All those things has to be set up in the system. Now this setup is similar to our traditional charge code setup. Here, when we talk about the landed cost, this is called as the cost type codes. So what we can do is like we can set up all the different costs which we are estimating as a cost type code. So here we have, like, if you see, like, you can give the name, let's say it is of freight, then you can define that where the debit is going to be with, if it is going to be accounted as part of product cost or it is going to be accounted as an expense for us. So we are assuming that everything is forming the product cost for us. And now the credit, like who will be charging this cost. So we will say like this is the third party supplier or the shipper who is charging us this thing. Now here, addition to, now this setup looks quite familiar like as a charge code, but there are additional thing which we have here, a few GL codes which we can map it. So one of the important GL code is this clearing account. So this clearing account is like till the time we receive the actual freight bills from the supplier, like which is $300 in our case, the example which we are taking, right? And the estimated is a $230, right? That $230 will be lying in this clearing account until unless we receive that particular actual bill for that, right? Apart from that, there are some additional the the additional different costing methods which we can use. So if you are using weighted average, FIFO, LIFO, all these things are not required. But if you are using specifically the standard cost or the moving average, so in that case, if you would need some the standard cost variance account, so you can specify that here. And in case of moving average, also you will need additional account which you can specify here. So depending on the valuation method which you are going to use in your process, you can define all the interim accounts which are required to do the accounting for these cost type codes. Once we define this cost type code, the next thing which we need to define is like similar, like if it is required, we can define, it's an optional setup, like a charge group and the vendor charge group we had. Similarly, we have here the vendor or the item cost type group, so that if we are defining the rule, we can either define at the cost type code level or the group level, or for everything, like for all the products or all the suppliers. So this is an optional setup which we can define. The next one is we have is the auto cost. So now once we define these cost type codes and we calculated we need to calculate that $230 as an estimated cost. So that $230 has to be estimated automatically once we create any transaction, right? But how system will calculate those things, how system will identify all the percentage based on measurement, and how it will do that, right? So what we are going to define in this auto cost is like we can define the cost area. Cost area is basically we call it as a voice, or you can have against the shipping container, or based on the cost area, like where you are going to transit your product. So let's take an example. We are going to use the voice here. So against the voice, we define our auto cost setup. And in our example, we have taken the freight, insurance, fuel, and the local transport. So let's say freight, we have the apportionment method here. Now it can be based on quantity, amount, volume, weight, measurement, volumetric, anything what we want to define. So let's say freight cost is our fixed $100. So we define is at $100. Insurance is some percentage, which is a 10%. So it will be like 100, the 10% of the product cost. So which is 1,000 and the 10%. The fuel cost is, we are saying based on the measurement. So we are saying we are going to get the 20 kg as a weight of that particular shipment. So 1 kg, $1 per kg, which will derive us a $20. The local transport, we say it is a percentage, but then we say percentage, how much? 10%, but of what? So then we define that it is a linked cost of the same cost type code, which we have defined here as a freight. So that means the 10% of this freight. So whatever the value we get it here, of that we will calculate the 10%. So this is how you define your auto cost setup. And this is going to be used for your estimation. The actual freight bill or the other cost will be, realized when the supplier will submit, but this is for the estimation, which we can define here. The last setup which we need to have is our landed cost parameter. There are some parameters which we can define. It depends like what are the things which we need. So you can just define that how the costing posting will happen. It is at the total level or the line level, or you have the adjustment will be at a transaction date, and which voucher will be used. So all these things you can define, and you can review these parameters if required. And then the last setup which we have is that all the additional cost will be submitted by our freight supplier. Now we cannot use a freight supplier like a normal supplier. If there is a vendor which is created in our system, we need to mark that vendor as a freight or the shipping company. Where do we define? It is on the vendor master we have. If you go to miscellaneous details, you can define that, okay, for this is going to be our shipping company which we are going to use, and this company will submit the actual freight bills. If we don't define this, it will be difficult for us to record the actual freight cost, which is like $300 in our example, which we have taken. So this is all about the setup, the basic setup which we need to have from the finance perspective. From the supply chain perspective, there are other things which are there, like you have to create the journey template, and there are certain other things are there. So I'm not going to that side. I'm just trying to talk about the financial side of the landed cost. So now let's talk about the use case first, which is we talked about, let's say we have received the actual freight bill after the item base being received and invoiced. So when we receive and invoice the product, right, the estimated cost was $230. So our final cost in the inventory will be $1,230. But when we will receive the actual freight bill, it should add the $70 to our product cost. So what is the financial expectation? So when we do the purchase order invoice, so our inventory should be debited with $1,230, right? Because that is just based on the estimation cost. The $230 should be going to our clearing account, which is defined on the cost type code. If you remember, we had one clearing account there. So it is going to be credit is going to be there. And then our vendor will be credited for 1,000. I'm just assuming there is no tax. If there are taxes, then we can add the tax amount and the tax as a debit as well. But let's assume without tax, we are talking this accounting entry. So the vendor will be credited for $1,000. Now, when the actual shipper will submit the bill for $300 for this $230, which we have estimated, right? So this will be done through the vendor invoice journal in Dynamics. And at that point of time, what system is going to do? System is going to debit your landed cost clearing account as 300 and vendor as a 300 as a credit. Now, if you see, this clearing account is having $70 as a debit extra because there is only 230 here, right? So you have to knock off this. So what system is going to do? When you will post this, automatically system is going to post one adjustment entry at the same time and add that $70 to the product cost where this 1230 is lying, and then put the credit into $70 into the clearing account, which will then knock off completely. So this entry is going to be posted automatically. How it will recognize that it has to be against this particular purchase order or the invoice or the product which we have received. I'll just show it to you next. So let's see this, how we can achieve this particular use case, all these entries in the system. So I have not, I'm not going to show in the system. What I've done is I have recorded all the transactions and I have put the screenshots here. So I'm going to just show you the screenshots of each and every step which we need to do to achieve this. So let's say there is a purchase order which we have created. Cost is 1,000, right? In the line details, now once you enable this, you will see the landed cost as one of the tab here, additional tab. And right now, if you see, there is no voice against this. So this is blank right now. Once the order is created and once it is confirmed, right, now that means it has been sent to the supplier. So once it is sent to the supplier, now what you will see is you have to go to the landed cost module, right? And there we have to create the voice. So we will just create the voice. We will define the shipping company here, the company who is going to submit the actual freight bills. So that is going to be here. So we will create a voice here by clicking new, then define, add some information. From the supply chain perspective, we need to add additional thing, we can add it. Then the next one is that we need to search for the purchase order which we have created. Now then that purchase order will be added to a staging list, and then we will we will see the view staging list here. Staging list means like we are creating the container for that because that is going to be supplied from the source location to our warehouse. So that is bit of the supply chain process. Once that the staging list is added to the shipping container, we can also select the container. And then here, if you see, we are selecting the measurement as a 20 kg, let's say, right? And this is our shipping container where we are adding the product. And this has been added and the voice is created finally for this. OK. So once the voice is created, what we can do is we can, this is the voice which we have created, right? So we can view this. Now, before we proceed further, we can see the estimated cost for the voice, like what we have defined. So to check the estimation for this thing, we can click on the journal tab in the Dynamics, and we here have the cost inquiry as one of the button on the option. If we click on this, we will see all the different costs, the auto cost setup which we have done, right? And then we can see the inquiry for this. And in the inquiry, if we see by the cost type code, we can see that $230 breakup as an estimated cost. And the actual cost is right now 0 because we have not posted anything. So this is about to create a purchase order, create a voice against that, and then see the estimated cost against that. The next thing which we are going to do is like our use case is that we have not received the actual freight bill. So we are going to receive this purchase order and invoice it. So once we receive it, do the product receipt and do the invoicing, right? If you see in the landed cost tab now against the purchase order line, we have the voice number updated here, right? So once this is done, now we can view our inventory transactions and the voucher posting for this. So we can go back to voice, which we have created, which is the 2 number. So now if we go to lines, we can see the transactions here. we can move to the inventory transaction page. If you see, it is showing us that, okay, there is a 1230 as a cost amount, which is there. Now, if we see the voucher entry for this, you see the 230 has been added to the posting type landed cost clearing, 1000 into the vendor, and 1230 as a inventory or the stock account. So till here we are good. Our inventory has been updated as a $1230, which is based on the estimated cost. Now the next thing is like we have received the bill from the actual supplier of $300, right? So let's see like how we link this. So what we are going to do is first we are going to create a vendor invoice journal. We will select the supplier here, and then when we go to the function, we will see that there is an option which is like select void cost. When we click here, what it is going to ask and what we can do, we can select the cost area and we can select the voice which we have created against that purchase order. So this is how system is going to identify the actual estimated cost, that okay, where I have to post the adjustment. So the moment you select this, then system is going to display all the cost which we are having against that voice, and then we can allocate against each and every cost. And we can also submit the supplier can submit the bill only for one cost, but right now let's assume supplier is submitting the bill for all the costs which we are having. So here if you see this is our estimated value. Here we can just add the actual value, whatever the value we have received from the supplier. So we can edit this, and we can distribute by clicking on this. And if you see, system is going to show us like what has been distributed. Okay, sorry. I mean, before that, we should have put the total bill value here, 300. Now this 300 we are distributing here. So system can keep the track here that out of $300, how much you have distributed on these estimated cost type codes. So this value should be 0 if we are allocating completely to this particular voice. And then we can click OK. Once we do this, system is going to create the normal journal entry. Now in the journal entry, when you will see like the vendor is getting credited by 300, and then all the individual cost codes which we have selected on the voice are getting debited. And all these accounts and the financial dimension accounts are getting picked up based on the cost type code setup which we have done. And this is basically your clearing account which we have defined, which is going to be debited. And now based on this, system will, the moment we post this, system will post the adjustment for that $70 which it should do for the actual inventory which we have posted. So now let's see the voucher entry here. So now if we go here, we can see that again, if we go to the same voice after posting that invoice, the actual invoice, if we see now the cost amount has been updated as a $1,300, right? Because 1230 plus 70, it has been adjusted. Now, if you see the accounting entry for the $70 in the bottom, right, you see it is debiting to our stock account, and it is going other miscellaneous expense, which is kind of the clearing account which we have mapped for that cost type codes. So this is how system will adjust this $70 which we have received one after posting the goods receipt and the invoice. So now if we will sell this product, our cost of goods sold is going to be $1,300, right? Now the next scenario is the use case which we have is the about what if the item is being sold before receiving that bill, right? So in that case, what system has to do is system has to adjust the $70. That is one. And then what you need to do is you need to run additionally the inventory recalculation, which will also adjust the cost of goods sold for already posted sales order invoice. So what I'm going to do, I'm not going to explain this scenario. I leave up to you. You can, based on the first scenario, which I have explained, maybe you can just try to practice this one and see like if you are getting this result or not. Okay. Now, the last scenario, the last use case which I'm having is another important one, which is a bit different, which is like we receive the, even the actual purchase order invoice before we receive the goods itself, and our goods are at, let's say, at the domestic port. So what happens is like customer, let's say a company creates the purchase order and confirms it, send it to the supplier. Vendor shipped the order and along with the PO invoice. So the moment the goods are shipped and let's say it has reached to the domestic port, or maybe it is in transit itself right now, but supplier has submitted the bill along with that. Now you have to record the supplier bill against the purchase order before receiving your goods. So that means you are not going to post the product receipt. You will directly record the invoice and your purchase order status will be invoiced. And then after that, you will receive the goods, which that means you will post the product receipt. So how this scenario is going to work, that's the next one which we are going to talk about. So the next one is like, first, before to achieve this thing, we need to have a setup, a small setup done on a couple of screens. So one of the setup is we have to set up our delivery terms, where we need to enable that if we are using this delivery term, that it is going to be in goods in transit management. Okay, so that has to be enabled. The second thing is on the warehouse, we need to define the goods in transit warehouse, because when you will do the invoicing of the purchase order, the goods has to be put in some warehouse, and that warehouse will be called as your goods in transit warehouse, because we are not receiving the goods in a actual warehouse. So we need to map this. And then when we are doing the invoicing, right, we cannot debit our actual inventory account. We cannot debit our actual stock account. So where we are going to do the debit, because we have to do the vendor credit because we have received the bill. So to debit that vendor the stock account instead of a stock account, so what you are going to see, like once you enable this under purchase order tab, you will see the landed cost goods in transit posting profile. And there you can specify the clearing account or GIT inventory account where this is going to be posted at the time of invoicing. Let's see quickly the process. So the same thing, let's say we create a purchase order for this product, right? And if we go to header, we have to make sure that we have the same delivery term for which we have enabled the GIT, right? We confirm the purchase order, and then we create the voice. So we have to follow the exact process what we have we have done for the previous use case. So we will see the voice and we will see against the purchase order. So this is the purchase order which we have. Now on the top on the journal tab, if you see there is a screen but option which is goods in transit order. If we click right now here, there is nothing, right? So now what is the use case? We have that we created the voice, we have a purchase order. So we have not received the goods yet. So, but we have received the invoice. So what we need to do is we need to record the invoice against the purchase order. So what we will do, we will go to the purchase order and we have to receive the bill against the ordered quantity because we can't receive against the receipt quantity. So we will just post the bill against this, and this invoice has been posted for this purchase order. Now let's see the inventory impact and how it is impacting. So if you see, we go to the inventory transactions. Now, right now, if you see it is posting $120 at the 10 quantity in the GIT warehouse with this cost. And if you see the accounting entry, it is just transferring it is first putting in the stock account, but immediately it is transferring to your landed cost goods in transit account, which we have mapped in the posting profile. Once this is done, let's say now goods are received in your actual warehouse. So now you have to do the receiving of that. So what you will do again, you will go to the voice and there you will see the goods in transit option. And if you will click this now, you will see the goods in transit order right now. Okay, because now we have invoiced the purchase order. So there is a GIT order which has been created. Now we can just click on receive and then receive this goods in transit order. And once we do this, if we see the inventory transaction, it is transferring from my GIT warehouse to my actual warehouse, and it is transferring the cost. And if you see here, the landed cost transit account is getting credited by $120, and then my actual inventory account is getting debited here. So that's how you can manage, record the purchase order invoices before you receive your goods against the purchase order. Okay, so I think that's it. Now I'm
Thank you
open
so
to
much.
yeah,
But that
I
was
think it is
absolutely amazing. Thank you. There was so much detail in those slides. It was amazing. So we only have 5 minutes left, but we do have one question from Nathan, if it's okay, mate. Can the estimated landed cost vary based on delivery terms?
Yes, so you can. I mean, they're not based on the delivery term. So the anything like the estimation has to happen on the cost type code based on those apportionment methods which are there, right? So there is no option of delivery term, but you can just try to calculate or derive your formulas on the cost type codes, the auto cost setup which we have done there. So there you can try doing that, but you don't have an option right now where you define the delivery term like FOB or something, and then you derive the cost there.
Okay, thank you so much. That was so wonderfully detailed, and I'm sure the guys are going to be super stoked about seeing getting the copy of that presentation, Saurabh. And I've also found your blog, and I have put a link to that in our chat as well, which everyone is very excited about seeing. So we're so close to time, so we're not gonna really have time to do the April update. But the recording for this will be posted, so you could just essentially pause on this screen. What I really wanted to cover, what I thought was the most coolest thing and did my head in the other day, was check this out. On our workspaces, it goes down now. Oh yeah. That's my
That's brilliant.
excitement,
Yeah.
isn't it? But you know what? It's one of these things I've been so used to having to go across for so long. All of a sudden, seeing it go down, I'm just like, what's happened? Oh,
much better. I like the vertical scroll is better.
Vertical scroll. It's just, oh my gosh, you know, what are these things? I mean, that, you know, the fact that we've advertised that as a major feature is just woo. Anyway, so yes, we'll post this up on here and you guys can have a look at this a little bit later. So to quickly wrap up, so unfortunately Kayla and both Paul have had a little bit of burnout, which happens to all of us, and are taking a step back for a couple of months. So we are looking for some people to help join our admin team. Mazel and I thought that it probably is about maybe 10 to 30 minutes a week of admin-y sort of stuff. And then of course the session. So what do we do? We do social posts, we find speakers, we host these sessions, we post up the YouTube videos. So if you're interested, give Mazel or myself a ping, because we are looking for some extra help, because you know many hands make light work.
Absolutely.
Yeah. Absolutely. And that leads us to the next session, and as you can tell, we're super organized. I mean, we do have a date, but it's always the last Thursday, so you know we have a date. Vertical update was it's an optional feature. I don't know about that one, mate. I'm gonna have to look into that. All I can see is
vertical scrolling workspace.
Vertical scrolling workspaces.
I think it's going to be that way. I don't think it's I think it's just they're changing the way you see that workspace.
Yeah. Right. So we know that we want to do something around Power Apps, so we might incorporate the data versus security for you there, Ian. And we know we want to do something around Logic Apps. We're just trying to find some speakers right now. So we're gonna find some people and advertise it up. But it will be happening on Thursday, the 28th of April. So we'll be posting the meetup link for that tomorrow.
And if you
yeah.
are a speaker in any of those, please do
Oh, yeah.
reach out. So
Yes,
if you
'cause-
are Logic Apps, if you are Power Apps, and certainly any other topics, so this is not limited to this, if you would really like to come, as you saw Saurabh and Nathan come and speak about something that they're passionate about and something that is really beneficial to everybody else, and there's a topic that you feel, you know, the burning need to share, please just drop us a note. We really would be grateful if you could share.
We love having people talk. We love getting people that are outside of the MVP circuit as well. So it is really, really good. We'll be getting Microsoft to do a couple of sessions in the future, so that's good. And it's interesting knowing. Okay, I'm going to stop recording now. So we're going to stop the recording. There we go.